What is up, everybody? LYFT just released their second quarter earnings. It was a pretty solid report. And if you followed the channel for a bit, you know that I own a position in LYFT. I think the risk reward looks quite good. I think LYFT looks pretty cheap. And honestly, in my bull case, which is basically just management's guidance, I'm looking at about a 4 to 5 times return on this stock over 5 years. So let's dive into the report. Let's see, is LYFT on track? We'll see what the market's reaction to this was. And as always, if you get value out of the video, subscribe to the channel. Now let's jump into LYFT. There was a lot to like in this earnings report. It was another record quarter for them. Record gross bookings, record revenue, record margins. Also, they don't highlight it on their first slide here, but shares are actually down in this company. One thing that you know if you've been following LYFT is they've been issuing a lot of share-based compensation, and the CEO, David Risher, has been bringing this down over time. And this is the first quarter in, I think, possibly LYFT's entire history where the shares are down quarter over quarter. So definitely good news on that front. Rides hit a new all-time high. Gross bookings, a new all-time high. Revenue, all-time high. We're looking at a 12% increase year over year in gross bookings. Revenue, this looks like to me about a 10 or 11% increase. Keep in mind, my base case that I'm looking at on LYFT stock is 10% increase on the top line. This also was a record quarter for margins, up to 2.9% margin on adjusted EBITDA. This definitely isn't my favorite metric of profitability, but they are outperforming here. I believe in the last quarter, they were guiding for 2.6 to 2.8%. So they're outperforming the top end of their range. Free cash flow has been incredible, close to $1 billion in free cash flow for this company. For reference, LYFT is about a $6 billion company today. So you might think 6 times free cash flow, that is dirt cheap. Now, I think the actual picture is not as good as this makes it seem. This free cash flow is not taking into account share-based compensation. So if you adjust for that, share-based compensation for this company is running at, $300 some million. Still, if you take that out and you call this $650 million, it's still trading for less than 10 times free cash flow. Another reason why earnings don't look quite as good as the free cash flow number is, as they have more and more rides, they need to accrue more money into an account for insurance reserves. Those are reserves that may potentially be paid out at a later date. They are deducted from expenses, but they're not deducted from cash flow. Cash flow is just measuring, the cash that comes in, cash that goes out. Still, even considering all this is great to see. And as far as guidance for next quarter, they're looking at approximately, if I just take the midpoint here, approximately 15% year over year growth in gross bookings, and margins to be somewhat similar to this quarter, about 2.8, 2.9%. And as far as the long term, they say, we continue to be on track to achieve the targets we laid out at our Investor Day in June 2024. Now, if you haven't followed the company that long, here's what they said a year ago. They were looking for, from 2024 to 2027, to grow gross bookings 15% annualized, to have adjusted EBITDA margins of 4%, and to be converting 90% of this adjusted EBITDA into free cash flow. They say they're on track to hit this. And when I look at this quarter, when I look at the past quarters, I've been following LYFT for a little bit. They've been improving margins pretty consistently. Back here a year ago, they were at 2.1% in adjusted EBITDA. They're up to 2.9, so they're close to halfway here to their target. Top line, gross bookings, 15% growth. They're a little bit under. They were 12% year over year this quarter. They're guiding to 15% next quarter. They're pretty close to in line here. LYFT has historically hit their targets. They usually hit their guidance, if not outperform it slightly. Looking at this quarter, looking at their trajectory, I think I believe management when they say we continue to be on track to hit these targets. Now, these margins they're referring to here, these are percentages of gross bookings, not revenue. For LYFT, revenue is, roughly 35-ish% of gross bookings. So when they're talking about a 4% EBITDA margin on gross bookings, that's roughly like 11 to 12% EBITDA margin on revenue. And then when you say, okay, free cash flow is going to be about 90% of that, you're essentially saying, free cash flow is going to be roughly 10-ish% of revenue. Just to compare that really quick to what I have in my model. So the company is saying, free cash flow is going to be basically 10-ish% of revenue by 2027. My base case, 5 years out, I'm giving them operating margins of 7%. If the company hits guidance by 2027, if they're really delivering 10% in free cash flow margins, then I think 7% operating margins 5 years out is almost certainly going to be underestimating the potential of this company. Again, my bull case is pretty much in line with what I think the company's guidance is telling us. And one of the reasons why the market may be sleeping on this one a little bit is because, there is uncertainty about where margins end up. This company is just flipping into profitability. We see over the trailing 12 months, and by the way, because the new quarter just came out, my sheet is actually not pulling in the most recent quarter's data into this. So I'm 1 quarter behind on this trailing 12 months, but you see that operating income is coming in negative. This company just flipped into profitability. So the earnings are essentially nothing. If you look at the PE ratio for this stock right now, and you're just using trailing 12 months earnings, before accounting for this quarter's numbers, you'd be looking at a PE of over 100. In fact, the last time I talked about LYFT, I got a comment that basically said, the PE is over 100. What are you talking about saying that the stock is cheap? Well, this is why it's easy to miss stocks like this that are just flipping into profitability. The earnings are essentially nothing right now. The margins are continually expanding for this company. If you're looking at price divided by earnings, and earnings are extremely close to zero, price divided by earnings is going to be an enormous number. But this company is benefiting from scale. This company is growing. Margins are not going to be like 0.5% in the future. Even if I just actually calculate the price to earnings right now, taking this quarter into account, if I look at the past 4 quarters on a GAAP basis, this quarter they made 40 million plus 20, 60 minus this $12 million loss here, you're looking at about $110 million GAAP net income that this company has made over the past 12 months. If we divide the current market cap of 6.1 billion by those earnings, you're going to get like maybe 55, 56, somewhere between 50 and 60 for that. If next quarter they just hit their guidance and they report a similar bottom line number to this quarter, you'd be looking then at about, 160, a little more than that, 160 something million net income for those 4 quarters. And, at that time, if the price of the stock is essentially where it is now and it's still, a $6.1 billion company, you'd be looking at about, 38, a little under 40 for the price to earnings ratio. So when a company is just flipping into profitability, you can't just look at price to earnings as the end all be all. When a company increases their margins from 1% to 2%, that is a double in earnings. We've seen this with Uber, we've seen this with multiple other companies, but when you just flip into profitability, the earnings growth is way larger than you might realize. If you're just looking on a screener for companies with, really low price to earnings, quality companies, you're going to miss LYFT. Now, before we just get into what to expect for a return on our investment here, let's just talk really quick about autonomous vehicles. I think self-driving cars could be a game changer for Lyft and Uber. I don't know how quickly adoption is going to roll out, and it's not really something that I'm adding into my model here. But I view self-driving cars as more of a potential opportunity, more of a potential tailwind for Lyft than a threat. I think it's very possible that 5-10 years down the line, self-driving cars are going to lower costs, are going to lower expenses for Lyft and Uber, and definitely could push margins higher than what I'm accounting for in my model. Just last week, Lyft announced that they are partnering with Baidu for self-driving cars in Europe. Lyft recently bought FreeNow, a taxi hailing service in Europe, and they're clearly trying to compete with Uber in this market. I think this is exciting. It's something we're definitely going to follow in the quarters to come. But again, it's something I don't exactly know how to model in. I think it's potential upside optionality that I'm not really including in my Lyft model today. So getting into our sheet, let's see what we could expect for a return on our investment in Lyft today. Again, my base case, I think this is a bit conservative. Lyft is outperforming this. I'm only assuming 10% revenue growth on the top line over the next 5 years. Operating margins get to 7%, and the company trades for just a 16 times multiple, which for a quality company like this, don't think it's anything crazy. And you're looking at an 18% annualized return in this scenario, more than a double on your money. Almost certainly, this would be a market-beating return. My bear case, I think I need to update because at this point, I think I view the scenario I put in here as just so unlikely. 6% growth on the top line over 5 years, operating margins just hitting 5%. And I'm giving them no credit for any free cash flow over the next 5 years. I think after seeing the results over the past few quarters, I have to update this. But even still, in this scenario, and just giving them a 12 times multiple, you're losing 4% of your money annualized over 5 years. That would be a pretty disappointing result, of course, but first, I've seen worse, and second, I think this case is so unlikely at this point. Now, the bull case, as I said, the bull case is basically just management's guidance. They're saying they're going to grow gross bookings 15% annualized. I'm giving them credit for 14% revenue growth over 5 years. Operating margins, I'm having it come to 9%, which if they hit their free cash flow margins and their adjusted EBITDA margins that they're saying for 2027, hitting 9% operating margins 5 years out, I think will not be a problem for this company. And in this scenario, when they're growing the top line like this, giving them a 20 times multiple, I don't think it's anything crazy. And if this scenario comes true, you're looking at 35% annualized on this stock today. That's more than a 4x on your money over 5 years with LYFT. Now, what was the market's reaction to this earnings report? It actually was a little bit unexpected. I mean, they came out with this earnings report and after hours, the stock was down about 8%-ish. As always, markets are unpredictable. And indeed, when the market opened this morning, LYFT was down a little bit and then just shot up. Right now, we're looking at it's up 3% on the day. The stock price will probably be different by the time I post this video. I don't know if it's going to be higher or lower, but as far as what I'm doing, I don't really care if the price is higher or lower. I'm not selling my shares today. As long as the company keeps hitting their targets, I plan to just keep holding LYFT stock. I think the risk reward looks excellent from here. But as always, this isn't a recommendation to buy the stock. It's just my opinion, just telling you what I'm doing with my money. If you got value out of this video, subscribe to the channel. And if you own LYFT, let me know what you're doing with your shares here. If you don't own LYFT, are you buying today? Are you not? Put that down in a comment below, and I hope to see you all in another video.